Welcome back. In our top business story, profits of the UAE's banks grew by over 11% between the 1st of January and the 31st of October last year, reaching nearly 25 billion dirhams. That's according to the governor of the Central Bank of the UAE, Sultan bin Nasser Al Suwaidi. In a statement, the governor stated that banks operating in the UAE have enough liquidity to meet the local market's demands on loans and financing investments, and in doing so, they rely on their reserves, deposits and capital. He added that last October, the UAE banks were able to restore the balance between loans and deposits and minimize the gap, which appeared for the first time last September. A rise in exports driven by high gold demand helped push non-oil trade in the UAE up 23% for the first 7 months of 2011. Figures released by the Federal Customs Authority show that non-oil trade rose by 98 billion dirhams to 524 billion for the period, while exports rose 45% to nearly 65 billion dirhams from the same period in 2010. Gold topped the export lists at nearly 6 billion dirhams. Petroleum was also high on the list at 262 million and jewelry and ornaments export at 190 million dirhams. Switzerland, India, Saudi Arabia, Iran and Singapore made up 75% of total non-oil exports at 7.4 billion dirhams. UAE imports, meanwhile, rose 22% to just over 337 billion for the January-July period last year. Emirates Steel has commissioned a 2.4 million dirham heavy section mill, the first for the region. In an official company statement, Emirates Steel said that it will now be able to produce large-size sections, parallel flange beams, columns and sheet piles. Constructed by Italy's Danieli, the Emirates Steel Heavy Section Mills expansion program has given the company additional access to local energy sources and technology. Suhail Al-Ameri, the chairman of Emirates Steel, stated, "Now that Phase 2B is complete, they will be the only producer of jumbo and heavy sections in the MENA region and will be able to offer reduced lead times and an improved product offering in terms of piece count and cut-to-length services." With that, let's now look at the stock indices across the GCC. It's the first trading day of the new year and also the week. We earlier asked Gaurav Kashyap, head of DGCX trading at Alpari Middle East DMCC, which data he watches closely this week for concrete signals on the health of the global economy.
Well, Lynn, it's been a rather uneventful first trading day of the new year as a result of a lot of the major exchanges remaining closed. What this means is that obviously the volumes have dropped and we won't see any type of volatile pricing action in a lot of the pairs. Particularly, one of the main stories that we're following today is the performance of the euro currency against the Japanese yen. Now, we have seen it hit an all-time record low against the Japanese yen on the back of safe haven deposits into the yen. What we did see on Friday was the new Spanish government announcing that the total budget deficit increased to 8% of Spain's total output. This is an increase over and above the 6% that the previous Spanish government had predicted. So as you can see, the projections have increased for the budget deficit, and as a result, the weakness has been further compounded across euro crosses. We do have a very big economic calendar coming up this week. A couple of the main releases, of course, will be the US non-farm payroll number towards the end of the week. We do have ISM manufacturing coming out tomorrow from the US, and we do have the Eurozone CPI reading on Wednesday. This is, of course, the consumer price index, which measures the inflation in the Eurozone area. Overall, I'm expecting to see a little bit of upsides in the markets this week. This as a result of the building up of some fresh buy positions after an aggressive sell-off in the final 2 weeks of 2011. Overall, I'm also looking at the Australian dollar, which looks good to have support at 101.90 levels. That'll be followed by 101.50 against the US dollar, and this is because of an expected improved Australian trade balance number. Also, we're going to be watching gold holding at that key support level of 1470 levels.